All right, everyone, welcome back for another episode of Carnivore Trades. Today is Tuesday, January 4th, 2022. So markets mostly negative here, although S&P about to be flattish on the day. It's trying to hold the flat line. Markets close in less than a minute here. IWM flattish to negative. Dow, big winner on the day, up 0.6%. NASDAQ, the loser, down 1.2. And that is on the back of yields pushing higher today. Yields absolutely surged. And I tried to tell you guys last week, I heard everybody and their mother over the weekend, oh, this bull flag, look at this bull flag here on the triple Qs. Look at the, look at this this flagging pattern. And what did I say on Friday? I said we closed below this green bar low, this inside bar, we have a failed pattern on our hands. Same thing on the semiconductors. And what do we have today? We have red all across the board in tech. Market's about to be closed here. And there's the closing bell. So tech down 1.3. S&P finished just negative. Russell just negative as well. And Dow dumping a little bit into the close. But this is on the back of yields here. So 10-year yield possibly on breakout. We had the surge yesterday, obviously. I remember a few weeks ago when I told you guys that there was a nice bull trap, or excuse me, a bear trap here on the TNX. And the TLT had a great bull trap the same week there. I mean, this is just as trappy as it gets. Look at this fake breakout and a reversal coming right back down. So yields potentially on breakout here. Massive inverse head and shoulders. 1, 2, 3. Third time's the charm. I don't think that we necessarily gap through 1.7 tomorrow. We might pull back a little bit, but I don't expect the pullback to be much more than a shallow little retrace. And then I think yields absolutely blast off. Same thing with the 30-year. 30-year already on breakout. Take a look at this trend line here. You have this smaller trend line, and then obviously got through that yesterday. Got through this pivot here, gapped above it, closed above the 200-day moving average. Let's take a look at the weekly there on the 30-year. Nice little clean breakout. Now it's got to hold it by the end of the week. So, we'll wait for confirmation. But again, I don't think it has to retrace much. I do think they'll try to push it back down, but I don't think it has to retrace much. And then I think we'll see yields push higher. And that is why I am, not liking tech. And I've been saying that for really months. And I said that this was probably the top in tech. And that has been the case so far. Everybody's tried to tell me otherwise, and SPX is going to 5100 and this and that, and this is a bull flag. Well, we'll see what happens, but I can't see this market getting much higher if the yields smash through 1.7%. Now, the one area that has done well is financials. We'll talk about that in a second. I want to quickly touch on IGV here. So cloud getting rocked today. Cloud software has been weak. We've been talking about this for weeks. I've been telling everybody about this potential bearish inside bar here on the weekly, and it did manage to hold the lows today, but you did make a lower low. You did manage to hold, but if this continues to make lower highs, I think you probably get a little bit of a bounce. But if it continues to make lower highs, it's gonna break, and you're probably headed down to about 345 here on the IGV if you get through this pivot here. So you've got this pivot here, around 375. You're hammering on that 380, 375 area. So your next area is going to be down in the 340s. But IGV week, we'll take a look at, Adobe week today, ServiceNow. Look at that candle there. Cloud flare down a bunch. Does have a nice support here, this little pivot there. I still think it can get through that though and push lower. Let's take a look at AFRM. This one took a big hit today through the 200, down 10%. Look at Shopify. Some of these tech stocks are absolutely rocked, down 10% here. So a lot of the cloud names, Zscaler got hit 6.7 there. So a lot of the cloud names are weaker than the semis, but I think the semis are next. The semis are holding up for now. They did hold trend, nice little tail candle there, but I just do not like tech right now at all with the way that yields are shaping up. Now, financials. So broker dealers here having a nice day, 1.8%, XLF 2.6, and then we have like some of the broker dealers, the investment banks, Goldman, Morgan Stanley up 3 and 4%, Bank of America up nicely, almost 4%, JP Morgan up 3.9, or 3.79, excuse me. So financials are holding the fort down for now. However, if the yield curve starts to invert, there's just nothing that's going to really hold the market up. So financials are doing okay with the higher yield now. because the yield curve is steepening. But if that starts to flip, just watch out below. Now, the other area, XLE, having a nice day as well. Up 3.5. This actually exceeded. I did not think it was going to get up this high. So it is challenging double top now. Now we can pull back to the weekly. And maybe it's ready to challenge, there we go. There it is. So this is a major, major trend line, needless to say. So maybe it's ready to challenge this. It has done a lot of coiling, a lot of consolidating. This red bar is massive resistance. You're going to have resistance here at the necktie between the 100 and 200 MA. But if XLE can, make a push here, it could potentially get through it. Trend is starting to go up on the weekly. Now, the only problem is if the market does fully roll over and we get some margin selling, nothing's going to be safe. So everything will go down, but potentially financials and energy stocks will do better with a higher yield. Take a look at the XOP, 4.3%. Again, this one got through those pivots I was talking about. So this one probably can fill that gap. Almost got there today. And then you'll have some resistance right here at 108. The OIH, nice follow through here. Yeah, just oversold, I guess. Again, this one was not something I really was too fond of, obviously, because it's just been such a laggard. But getting a nice snapback rally should have some resistance at this pivot or this red bar. But nice little day there for energy stocks in general. Crude also getting a little bit of a pop, but not nearly as good as the XLE. So a little bit of a divergence there. Again, crude could potentially challenge that 79 area. You could make a case that this is still just consolidating. And, if it does enough of that, then maybe you can push through and get to 80, 81 or so, wherever this gap fill is, 80, 58. So maybe that would be upside for crude in the near term. Nat gas, not really a whole lot going on. It still kind of has this little inside bar here. So you're still inside of this red candle. I think this is setting up for one more flush, and then we will get a really good buy area. Dollar index. So dollar was a little weird today. Dollar's typically been rallying very much so when yields rise. And, it was positive today, but not as much as you think. It was actually down quite a bit earlier. If we take a look on the intraday, had a nice dip, then recovered here. So dollar kind of a flattish day, but ultimately it's setting up to move higher here. Now, here's this is the kicker here. Gold erased, most of yesterday's losses. Got a nice bounce. This doing so while the 10-year was up 2.5%. Now, that was just one day. We're not going to, and we did have we had a big down day yesterday, expectedly, with yields rising. But today, gold rallied. If this continues, meaning gold and yields are positively correlated, it's going to be like if you think inflation is bad now, let's just say things will get much, much worse. So if gold starts to break out with yields, it's not going to be good. It's going to be very ugly, and the inflation is going to get out of hand. But just one day here, let's not make too much out of it yet. Silver also bouncing up today, up 1.25%, able to kind of recover some of those losses from yesterday. Platinum up 2% here. This is still a decent little pattern here. So platinum may want to move up into that 1020. 1025 area in the near term. Could be setting up for a pop there. And palladium, more of a dead cat bounce here. This one is acting a little bit weaker. There's just nothing to do with palladium right now. Copper, on the other hand, again, holding up. I like copper and I like platinum right now. I think copper is setting up to push through this 451. And then if it gets through that, I told you 464 would be kind of your near-term area there on copper. Let's take a look at crypto. So again, crypto, Bitcoin here kind of flattish, Ethereum flattish, Doge. We talked about these kind of bear flag patterns that are on the daily time frame here, pretty much across the board. You can see them there, just flagging. And again, with yields higher, why isn't Bitcoin moving? Why isn't Bitcoin going higher? I thought yields are supposed to be risk on. Well, the thing is, and I've been trying to say this to people, and just nobody wants to listen, there's more than one thing that moves bond prices. It's not just, yields are up means risk on, means growth. It's not always like that. Sometimes it's yields up because of inflation, which means risk off. And that is what I think we're seeing here. That's why I'm not very fond of crypto right now. That's why I think the Russell 2000 is having trouble. Let's take a look at the Russell 2000. Russell 2000 should be rallying. Yields are up, right? That means growth. That means risk on. Look at all the financial stocks in the Russell 2000. Why isn't the Russell unable to break through these pivots? Russell's negative on the day where the 10-year was up 2.5%. That's telling you that the market is not, the yields are not going up for growth. They're going up because of inflation. So this is a major problem, and it's going to continue putting pressure on tech. And I believe that you should position yourself accordingly for that. But in any case, digressing too much here, come join me on Patreon. We're absolutely crushing it right now, by the way. Just 2 days into the new year, and we're already in the money on basically everything that we have. We're really knocking it out of the park so far. I love the way we're positioned. And the service will be moving to its own website on February 1st, www.carnivoretrades.com. That is free to join right now. But if you want to get in sooner, you can join on Patreon for $5 a month. And eventually that'll be moved over to there at the end of the month, February 1st. Anyways, guys, take care. I will talk to you all tomorrow. Have a great rest of your day.